All right, welcome back to Limitless Profit. And if you guys made it through part one, I really appreciate it. I mean, part one was just a simple um, strategy just so we can have a basis to go off of. Okay, it is not at all a strategy I recommend. What it was meant to do was show you an entry strategy that's very popular but has its faults and how we can improve upon that. So how we're going to do that today in this episode is to help isolate the times we need to be trading to get the most effectiveness out of our trading. The most movements, the most pips we're trying to get in and we're trying to get out, okay? So let's get right into it. All right, so now we're going to zoom in here, and these are the lines that we had. Just to reiterate a little bit from part one, that way you don't have to go back and watch part one. We're going to skip that one because all it was doing was explaining this, okay? We have a 200 moving average over a 21 moving average over an 8 moving average, okay? So this is basically a moving average cross. I don't know why this will not stay away. This is basically a moving average cross strategy, okay? When they are all matching each other, right here you would sell, right here you would take profit. They're matching to the downside, right here you would sell, right here you would take profit. Something along those lines. But then it starts to get real choppy, such as right here you would sell, right here you would take profit, right here you would sell, right here you would probably take a loss, and so on and so forth. So what we're going to do to simplify this is we're actually going to change the 200 exponential to a 233. Okay, this is just what I use. The only reason we had it the other way is because I was just showing you a very popular strategy. And we're going to change the 21 to a 55 exponential moving average. And then this 8, we're going to get rid of it. Okay, 3 lines on there is too much for me. And if we're going to continue this series, I don't want a bunch of crap on the screen. So I can deal with 2 lines, okay? So the strategy is still the same. Nothing has changed, okay? We're going to go with, let's zoom this in here. We have a cross here. You get in. We have a cross here. You get out. Pretty simple. However, right here, this first demonstration, there's huge faults. So we had the cross right here, okay? Price was actually way down here at 21.25. By the time we had the up cross here, price was way up here at 21.29. So we just lost 4 pips. We're on a 1 minute time frame, so that's not too big of a deal. But it still has its faults. So what I would like to show you is the best times to trade, okay? London session and New York session make up more than 50% of all forex transactions in the market, okay? So London session, if you're looking at my charts, okay, you're going to have to check with your own time, okay? If you're looking at my charts, it's directly at midnight. I like to do, let's do a 4-hour block here, okay? So directly right here at midnight, London's open, okay? We start moving in, moving in, moving in. And then at 5 o'clock, here, what we'll do is we'll go ahead and we'll put it all up on the screen. So Thursday, right here, London opens up. We'll actually go to 11, just to give us a little bit of room. 11 o'clock, and then it's actually 6 o'clock my time. So this is where most of the transactions take place, okay? London opened just right in here, okay? And New York session opens right here. Perfect. That is a huge move. This strategy would have worked perfect. We had a cross actually quite before it. We had a cross about 11 o'clock, okay? Price came back up, came back down, and looks like right in here, we had a little bit of a push up just to continue down, okay? What do we have? Lower high, lower high, lower high, lower high. This is just the London session right here. Okay. Then the London session goes until right here. So between this dot and this dot, New York and London are overlapping. So they're both open during this time, which is why you get a huge up, huge down flexibility in price action. Okay. And then New York actually closes for me at, where's it at? Right here. Actually, that's not even it. Just kidding. It's right here. It's not on my chart actually because TD Ameritrade closes down during this time. So actually, let's go to the swing high. Okay, so the swing high is way back here. Okay, so London opens right here. Boom. London continues a downtrend. We're matching our little strategy we have right here. Perfect, perfect. Overlapping right here. New York starts right here. Now they're both overlapping, and then New York closes right here. So this entire time from from London session right here to New York session right here, we have basically a perfect trade. The lines crossed just before London open, which is right here. So they crossed at 21.26, and they didn't cross again until way down here at 20.70. So that is a very nice trade right there. It is 55, 56 pips, somewhere in there. Okay, and it was pretty easy, right? So I'm not saying you have to use this strategy, but these are two lines. If I were to use moving averages, these are two that I would use. Okay, why would I choose the 233 over the 200? Let's do a little comparison. Let's change this to the 200. So they are actually very close to each other. Okay, there's not a huge difference, and the 200 would very well work. I mean, we came up here and we touched the 200 here, we touched the 200 here, but I do like the fact that by using the 233, we have a little bit of space, so we never actually touched. Okay, so if you're going off of like a price action crossing the 200 strategy or something like that, you know, you could get in here, get out right there, get in here, get out way down here. So it just basically incorporated a little extra trade for you and made it possibly a little bit safer. Okay, so since New York has closed right here, let's go, we have live market action. We are actually trending up right now. Okay, we're actually starting to trend up, and this is right now Asian session is going on. So that'd be Tokyo. Let's see, has Australia opened yet? I think Australia is gonna come online here soon. I don't think it's quite opened, but this is actually a pretty decent strategy if you look at it right there. You just do a 233 and a 200, very close together. Look, they crossed up here, boom. They cross again, way down here, boom. You lose quite a few pips in between, but the point of this video was to illustrate the times that you're taking your trades. You need to do it when you have more volatility in the market, more transactions being completed, because what you want to do is basically be on the same page as everybody else. Okay, you guys all want to be buying at the same time, or you all want to be selling at the same time. That way you are riding momentum from each other, and we can come together as a collective and hopefully make some money. Okay, so let's see what happened before London opened. Okay, so we're going to back up here, and I'm going to put a marker on when New York closed. So now we're just going back one day. Okay, New York closed right here, and it looks like we continued to go up. We continued to go up. I actually got in this trade not quite up here. I bought it on its way up right here at 21.38. Okay, I bought right here yesterday. Okay, there's another part to this. This is going to be an ongoing series that's going to explain exactly why I bought right here. Okay, I didn't quite wait for it to get all the way up there. I thought it was going to go to 121.43, 121.41. It actually hit 121.42, so I was right in there. Okay, and I'm going to show you real quick so you know what to look for the next part of this series. Okay, it's going to be price action. I knew that we had a double top in play right there. Okay, so I'm going to go ahead. Let's go to, we're going to make a line right there. This is a double top for me. Oh, actually, I want that to go the entire, how do I extend to the left? There we go. Okay, so this red line is going to signify why I bought right there, and I rode this down. I actually only rode it to there. I took a very small chunk. I was headed to the gym, and I don't like to lift distracted. So I actually took a scalp right here from there to there, boom, closed my trade, went to the gym, worked out, everything's great. All about gains in the forex account, all about gains in the gym. All right, moving on. I will show you exactly where it double topped. Boom, right here. This is the double top play that I was going for. We came up right in here, and so this right here is actually probably close to the what was I trying to say? What was it? 121.43. Okay, that's probably really close right there. I can't see on my chart because I have the stupid recording app in the way, but anyway, it's probably real close in there. So based off of this price action and divergence, I entered that trade blindly on its push up. I mean, look at this 30-minute candle. Okay, this is a solid 30-minute candle going up. I bought in there before it wicked out. I just knew from price action and divergence that we were going to hit right here and we were going to sell off. Okay, I didn't know how far we were going to sell off. I hadn't made it that far yet. I just knew that these two had shown, or this one right here had shown resistance right here, and based off of divergence on my chart, I knew that, well, I didn't know, you don't really know anything. I had a high probability chance that we were going to get rejection right here. Now, if I had been smart, let's change this back to a 55. I could have held it to maybe, let's say, the 55, waited to see if we were going to get rejection, which we got a little bit of a push back up, and then we pushed right through it, went down, probably sold again at the 200, waited to see what was going to happen. We got rejection again, and we pushed all the way down further. Okay, that's one way to trade. I had a lot going on yesterday. I hit the gym, but this is a perfect setup right here. I should have held that, okay? I went to the gym. When I got out of the gym, I was super tired and I had to go to work the next day, and I just was not going to stay up again and watch the charts, okay? That is the biggest problem is, for me, London session and New York session come super, super early in the morning. It's midnight for me when London opens. Okay, and I have to be to work at 7 in the morning and I wake up at 5:30. So if I'm awake at London Open, I only have like 5.5 hours of sleep, and it's not enough time for me to get in my trades and do what I got to do without stress. Okay, so I like to trade stress free. That's why I basically take scalps either right when I wake up in the morning or right as I get to work a little bit early, hoping that I can scalp a little bit. So right around here, so right after New York opens, I wake up. So New York's just opening, and then I try to scalp right in here, which, as you can see, looking off the 1 minute, it's not too hard to do. So we pushed up past this little 55 EMA. We got rejection. We didn't even come close to the 233. So this is an instance where I could have sold it right here, rode it, rode it, rode it until we crossed, or something of that nature, okay? I use price action, just how I knew this was a resistance. In part 3, maybe part 4, I'll get into price action, okay? I'm going to put one more indicator on here for you guys on before I move in. This is going to be for part 3, before I move in with the series to go over price action and divergences, okay? So around part 4, part 5, I'll get to price action, but this is going to be a really good series. It's going to help you guys because when I first started trading, you know, I was looking for basically a system like this, okay? If you go back and watch the part 1 video, that was basically me trying to trade in the beginning of my journey, okay? It's like, okay, what's the most popular thing on YouTube or scalping, okay? When the 8 crosses the 21, as long as it's above the 200, we're going to make money. Easy enough, let's do this. And then I lost. You know, I lost money in the beginning. I'm thinking, what the heck, dude? If it's the most popular one, that's what everyone's doing. So why am I sucking at it? Couldn't explain it. You know, a lot of people don't even like the 1 minute time frame, but if you want to, I mean, I just showed you right here, just this simple little cross going off a price action, moving averages, and the cross. We just made 55 pips, okay? I think, oh, this is USD CAD, okay? So I only trade USD CAD because, like I said, I'm super busy, and if I get like 5-6 hours of sleep, that's good for me. That's all I need to operate. But if I throw trading in there, um, I don't have time to go through and look at all these different indicators, or sorry, all these different pairs and do my price analysis on it and check for moving average crosses and all this nonsense. It's better for my style if I just stick with one. I can only make a couple trades in the morning, you know, maybe on my lunch break if I like what's going on, if we're getting clear rejection, and yeah. So I also am doing a series on forex signals. I am truly interested in forex signals. Okay, I'm not just doing reviews for you guys. I'm actually going to use them. Hopefully, I have a 5-figure trading account, and I don't use all of it scalping. So I have a lot of equity just sitting there. So if I find a good signal provider that's going to give me more signals to trade because I live a busy lifestyle, then hopefully I'll get to trade full time and I can do my own chart analysis and trade my own trades and not have to worry about, you know, getting in tiny little scalps here and there on my lunch break or on my, you know, drive to work. Well, not my drive to work, but you know what I mean? Like after I get to work, you got 5 minutes sitting in the parking lot. Okay, I got a little bit of time to go over some chart analysis, and that's exactly what I do. I really enjoy looking at the charts, and so anything I can do to help you guys, it really makes me feel good. So if you're enjoying the series or there's something that you want me to cover, I'm already going to cover divergences, where to put your stop loss, other than using a moving average crossover, because honestly, I wouldn't even wait for a crossover. It does work. It's simple enough. I mean, you only lost 4 pips on this trade, but then you gained like 55 pips on this trade. Okay, let's actually go to a different. Let's go to GBP JPY. Holy crap! Okay, so this worked out extremely well on GBP JPY. Holy smokes, that is 153.98, 155.98. So 200 pip move right there. Okay, let's go GBP USD. Let's see what it's doing here. Okay, perfect. Moving average cross. We crossed right here. Boom. And we crossed again way up here. Wow, this strategy is working already. Not necessarily. It's Thursday. Okay, we are midweek. Let's see what it did on Monday. Did this strategy work on Monday? Let's go Monday. Moving average cross here. Boom. Moving average cross here. Boom. Now we're buying. Now we sold. Now we're buying. Yeah, I mean, I guess it worked on Monday too. Let's go to Euro USD. All right. Let's see. Let's go back to Monday. Euro USD looks pretty choppy right in here. I'm not gonna lie. This is definitely where more sophisticated tactics such as price action would allow you to get on this. And obviously, somewhere I guarantee right here, we're hitting like a double top or extend to the left. And how do I set this as default? All right, I'll mess with it later. Let's see. Yeah, there we go. Boom, right here. This is a double bottom. or triple bottom. I don't know. One touch, one touch, one touch. Okay, I don't trade this. I mean, it's just price action. It's pretty self-explanatory once you know what you're looking for. So obviously, this is our swing low. This is our swing high, and we had some resistance right in here at this level because it looks like we had a reversal here. Looks like somewhat of a sloppy head and shoulders, and or a W pattern or whatever you guys want to call it. And yeah, so we knew that we were going to bounce right here. You stack that with some divergence and boom, bada bing, you got a clean trade. That's what I'm talking about. So I've rambled on for 20 minutes. I really appreciate you guys if you've made it this far. This is basically another strategy introduction, and it can be used on any time frame. I mean, look, I just went to the 30-minute. We crossed right here. The cross is here, but price action was way the heck up here. 21.42, and then we crossed right here, but price action's way down here. 21.80. Okay, so 40 pips. It took you all week to get the, or 2 weeks. It took you 2 weeks to get those 40 pips. So not too impressive, but hey, a win is a win. So I'm done rambling. I really appreciate you guys checking out this video. I have so much to talk about. I mean, I really enjoy looking at these charts. I'm even showing you guys like stuff I don't even trade. If you see me USD CAD, I know like the back of my hand, I can tell you what's going on with that pretty much at any given time. We have our swing low here, our swing high. So when we came down here and we pushed back up, I knew we were going to get some rejection, and I sold that bad boy. I cut myself a little bit short, so now I'm going to go back. You know, we have some price action right here, boom, some resistance. So if we pop up right here, I don't know what's going to happen, okay? But if we, I mean, look at this too. Our 55 is above our 233. So we might just continue on, but I would not be surprised if we bounced right here. Price came up, hit right there, and then we got rejection and came back down to this level. Even this level. I mean, there's so many lower levels here. I mean, we could go there. We could go there. Ooh, it didn't click. We could go here. I mean, this is where price action is going to help you out. And yeah, we'll explain that later on. So make sure to subscribe. Check back for the series. I'm going to create a little playlist. That way, if you guys want to drive in your car and listen to this, or, you know, watch one video after another just to get it pounded into your head, hopefully you'll get it a lot quicker than I did. So I'm trying to streamline your trading career all for free on YouTube. So make sure to subscribe because it does not cost you anything. And this is already, I have like 5 or 6 episodes of this planned out in my head. And that's just showing you a simple little EMA crossover strategy. I mean, that's like the simplest, most straightforward thing you can do. Oh, it crossed right here, sell. Oh, it crossed right here, take profit, or reverse your position. I mean, I wouldn't reverse your position because the cross is way the heck up here. And then when you got in, it's way down here. So you probably broke even on that trade, and it took you a full week and a half to do it. So there's a little bit of sifting through information, and I'm willing to do it for you guys. Just hit the subscribe button and turn on those notifications.